Awesome. What a talk. Amazing. Amazing talk with Jack, man. What does it even mean to have assets demonetized? I think we all take for granted for like, what does it mean? But maybe let's take a short draw. Like, what does it even mean? And let's start with Larry. That an asset like Bitcoin is demonetizing other assets.
Right. So people work, and they ultimately, if they're productive, they earn more than they need to consume. And so they have savings, and they put their savings into assets that they believe will hold value, which historically have been a mixture of cash, well, cash doesn't hold value, but bonds, stocks, and real estate. And what's happened, obviously, is the world has been turned on its ear with the invention of Bitcoin and the realization that fiat is a melting ice cube. And so we now have an incorruptible asset for the first time in human history, really, that can't be diluted. And so, you know, it's only 2 trillion of 900 trillion of asset value, but it's destined to become pretty much all of asset value eventually.
Yeah, to me, demonetization means like other asset classes. You could call it a monetary premium, but it's really a debasement premium because the money's broken. And so people have to save for the long term in other asset classes, and the value of those asset classes go way above their utility value. It's more than the wood costs for a house, you know, the labor and all it takes to build it. A painting's worth more than the materials made to make it. And so all these assets have been inflated because the money's broken and people have to save. Bitcoin is superior, has superior monetary properties. So it's likely going to suck capital out of all these assets and reduce the monetary premium or the debasement premium that is in their valuations because of Bitcoin's properties that we all know and heard of: digital, scarce, fungible, all the portability, verifiable, all those things that make Bitcoin such a great monetary asset that these other assets really can't hold a candle to.
With Leon, we always talk about real estate, and I think it's especially interesting when we talk about real estate. You see the houses, and you're like, that house is worse than 5 years, but it's somehow worth more. How do you look at monetary premium and devaluing?
Yeah, so I take the perspective of a business owner that works in real estate development. So just out of context, I work for a real estate developer. We've been active for 10 years. And around 4 years ago, I switched my position from being active in construction to take on the role of the head of Bitcoin strategies. And I take the following look. I say that Bitcoin as a superior store of value to real estate really takes demand away from the product and the service that I offer to the market, because Bitcoin is easier to access, it is cheaper to maintain, and it's absolutely scarce. So there's an easier form of savings than real estate investing, despite the leverage effect and the tax advantages that exist. So as a business owner, I ask myself, how does Bitcoin negatively affect the demand for the service that I offer? And how can I then incorporate Bitcoin to not be threatened by it, but to benefit from it?
And it's interesting because we talked right behind on the stage that we have this portfolio management. We have this like traditional view of like that's like allocation and how we do it, and then there's like new generation of Bitcoiners like Jack and us, like oh like we're just 100% in Bitcoin, and it's really a really different world. How do you look at that?
Well, yeah, I think gradually that. You know, as the dinosaurs die, the younger people who have got the capital to invest will start to do that in the way they see fit. And I think if my parents' generation, getting on the housing ladder was the thing you wanted to do, then I think when the tech bubble came, everyone wanted to buy tech stocks. And so you've got the world's capital flows towards these things, and generation to generation it changes. And I think our generation, or maybe people even younger than me with less grey hair, they would then use Bitcoin as the thing that they would use as their generational asset. And I think the longer this goes on and the more the performance of Bitcoin frankly embarrasses the performance of any other asset class, why would you carry on investing in other stuff where there's a clear track record and a path to a Bitcoin appreciation significantly higher than, say, property or even tech stocks? So I think that will be the demonetization of other assets, because why would you bother with them long term if they're going to go to zero versus Bitcoin anyway?
It's like that, what else would you do? How is it for you, Larry, with gold, coming from gold? It's like the gold bugs are sometimes very emotional and very fixed on gold.
Yeah, well, Look, before Bitcoin existed, gold was the soundest form of money that we have, and it's still sound money. I like to call it analog sound money, and Bitcoin is digital sound money. And Bitcoin really is, in my view, it's digital gold, and it'll evolve into a medium of exchange, but that's still in process. Gold's a suitable choice for people who can't stand the volatility of Bitcoin, and so I have older clients that take a bigger position in gold than they might in Bitcoin. It can't be printed, but ultimately it too will be demonetized. I mean, I believe that over a longer period of time, people will come to see that, you know, it's just a rock, and the supply does grow at 2% a year. I mean, in a 40 to 50 year time frame, the amount of gold on the planet will double. And the thing that's so unique about Bitcoin is that it's a commodity which it's a perfectly inelastic commodity, which is to say that its price does not affect its supply. The supply schedule is set, and this is why Seyr can accurately say to Laura, it's going up forever.
Is there a case, if Bitcoin is the soundest money, is there a case to be made that in any other asset there's a monetary premium justified?
I think about demonetization through the lens of evolutionary biology. And so Bitcoin really, I mean, when species in an environment, they don't really like outright battle each other. They really just try to outcompete, and they just try not to die. And so it's about survival over long periods of time. It's about adaptability, resiliency. And so when I compare and look at Bitcoin to these other asset classes, I think all Bitcoin has to do is keep doing what it's doing, because the other ones will prove over time that they have fatal flaws that allow them not to be good long-term stores of value. And so I think right now Bitcoin is like a camouflage tiger, perfect for the environment of rising geopolitical instability, currency debasement, digital globalization, increased censorship. Those four things, Bitcoin is perfect. It fits for that environment, where these other asset classes will continue every single headline that we see about a natural disaster for real estate, or CERN just created gold atoms out of lead. You know, these things just happen that you're like, wow, that can't happen with Bitcoin. I'd rather store my wealth over long periods of time in that asset opposed to these. And so I think that demonetization is just a function of time, and just like evolution, it's a monetary evolution that will just unfold.
As it's the only one that's actually scarce and limited, and the other one is like, it can expand in some regards.
Great.
How do you look at equities, Peter, when we think about traditional finance and the spaces? There will always be some sort of traditional financial spaces. How does equities and other financial products look on a Bitcoin standard?
So if you look back, so I'll tell you back in the old days when you took out a financial product, you would get an illustration of what that would be worth at the end of it. So, you know, I'll speak from the UK perspective because that's where I'm from and that's what I worked in. But you would have got an illustration, and they would assume a low, medium, and high growth rate, and that they would say this is what it would be worth when you get to 65. And the rates they used to use pre-2008 crash was 5%, 7%, and 9% as your illustrative returns on a low, medium, and high perspective. Since 2008 crash, they then changed those, and now if you took out a pension product in the UK, you get an illustration based on the fund you're investing in, and they would have like a base rate of maybe 1%, then a 5%, then a 9%. But if you look at the returns, again, like I said earlier, you would get in Bitcoin. Why would you even bother with these sorts of things? So then the problem is, how does money then flow into these companies that we do actually need? Like I used the example of Apple or Microsoft earlier. Like you're still going to need a mobile phone. So what happens when all the assets are sucked away from these equities, and you don't need to invest in them to make money anymore? They don't get loads of money coming into them. The share price doesn't go up. They don't become more valuable, but we still need them. So there's a balance to strike of there's stuff we still need, like you still need property. You'll still need a tech sector. So where's the balance of taking all the assets and demonetizing these things just because Bitcoin's going to outperform it, but they'll eventually just become a utility provider?
Yeah, so what I just want to add on what you guys said is that I think especially when we talk about real estate, which is one of the biggest stores of value, there's a nuanced approach to the demonetization, because there are individual preferences and they will continue to exist. So I believe that people will continue to store their value in different objects, different types of money, due to the subjective preferences on how to prepare for the uncertainty of the future. But you can see some people straight out sell their properties to buy Bitcoin. That's the most obvious way of how Bitcoin is demonetizing real estate. Number two, people that can't sell their real estate, maybe it's not yet in a tax-advantaged state where you can sell it tax-free, they lend against it. Some people mix it, so where they take the leverage opportunities in real estate and they mix it with the store value opportunity in Bitcoin. And then something I would like to mention very briefly is that Bitcoin treasury companies like Strategy that now offer fixed income products like Strike, for example, that have an upside mixed into it, they also now offer the opportunity in the fiat world to store your value and generate income outside of real estate. So I think that is an interesting development that I didn't see a couple of years ago, how the fixed income market that is building around Bitcoin through companies like Strategy and MetaPlanet gives the ability to generate income and also have an upside because it's linked to Bitcoin. Of course, it's not the same as owning Bitcoin because you stripe away the self-sovereign properties, but it does create a situation where people can park their money in a product that's adjacent to Bitcoin rather than an asset like real estate, for example.
How do you look, Larry, at things that we kind of like Bitcoin, sound money, and then we put like all those fiat financial services and products on top of it versus you just have Bitcoin and you buy, sell, and you like just like operate on a Bitcoin standard?
You're probably alluding to some of the Bitcoin treasury companies, right? Yeah. Well, look, I'm in favor of everybody and everything that buys Bitcoin, supports Bitcoin as the next monetary standard. I mean, I think Bitcoin will become the numeraire, for my kids and my grandkids. And so therefore I'm in favor of the Bitcoin treasury companies, and most particularly Michael Seyr and what he's done and really kind of world-changing stuff. I've been around the investment world long enough to know that these things do represent leverage in the way that they're behaving, and leverage kills. It works both ways, and in a bull market it's fun, but in a bear market it can be rough. And so, I think I saw a tweet the other day of somebody who had sold all their Bitcoin in order to buy a Bitcoin treasury company, one of the more aggressive ones. And I thought to myself, boy, I'm not sure I'd be doing that. I still think Bitcoin is the base layer, and the IRR in Bitcoin is going to be outstanding for the next 30 years. And you don't necessarily need to leverage it. But if some people want to leverage it, that's fine. Just consider the risk associated. I mean, leverage always does have risk with it. And history shows in these big transitions, if you look at the chart of gold during the Weimar transition, that, there can be big swings. And I mean, it's not that far back that Bitcoin was at 15,000. And so to think that we won't have further drawdowns in the future, I think is unrealistic. And I think that those companies need to be careful so that they're in a position where in one of those drawdowns they come out the other side whole, so to speak.
Yeah, what happens if Bitcoin has another 80% drawdown?
Right, and I don't think it will. I don't think 80 is in the cards, but my view personally is that Bitcoin could easily go to 250 in the next year and a half, and then it could easily correct 50% off that and come back down to 125 or something. I mean, I think the cycles are getting less severe. And I don't think the halving actually has a lot to do with it anymore. 95% of it's been mined. Pretty much everything that's being mined is being absorbed quickly. I think we're now in a cycle of fear and greed. And what will happen is we'll break through this wall at 112 and we'll squirt up higher and all these shorts. I mean, the other thing that's going on that most people may not be aware of, paper Bitcoin is emerging. I mean, if you go to Binance and you look at the perpetual futures in Bitcoin, it's gotten to be $15, $16 billion of trading every day. That's paper Bitcoin. That's people who don't have Bitcoin. They're just trading. They're making a bet on the price. And, it's going to get overrun. I mean, we're going to break through the top of this range, and some people are going to get hurt. But, to me, that's what explains the fact that, Seyr and the treasury companies are buying tons and tons of coins. The price isn't moving that quickly. But I think that could change. When we break through this 110, 112 area, we're going to squirt much higher very quickly, in my opinion.
Big print is coming.
The big print is coming. Somebody wrote a book about that. Yeah.
Sam, I'm wondering often what individuals like we can do to kind of like accelerate the demonetization, and obviously there's strategies like having more fiat debt to buy more Bitcoin, but it's like has a lot of risk to it. So like, how do you look at someone trying to get the Bitcoin monetization earlier on, like getting the Bitcoin standard a little bit earlier, what individuals can do for that?
Pull forward Bitcoin adoption that way? Yeah, the best way is just to increase the value you provide society, honestly, and just stack more sats. That's probably the best way. But I think using Bitcoin is important. I think taking self-custody is important. I think education around that, running your own node, using different wallets, building useful products and services is important. That's how you really drive Bitcoin forward, education and building products and services on an individual level. I mean, just being active in your community. And, for us, go back to your last question, I just think this financialization of Bitcoin or all these different products that you're seeing develop, it's kind of just part of the maturation process of the asset class. And it actually provides people with more exposure to Bitcoin. It's not going to replace holding your own keys and having spot Bitcoin, but some people just aren't willing or can't buy spot Bitcoin. Some institutional investors have investment mandates. Some people are maybe really elderly people that are on a fixed income. And so, for instance, at Battery, we're combining Bitcoin with real assets, high-quality credit. And so what that does is it provides the upside of Bitcoin, but it also provides income generation and some downside protection. So it kind of dampens the volatility a little bit. And that's useful for some investors. And that's similar to what Michael Saylor is doing with the perpetual preferreds. He's providing different buckets of volatility and risk to fit investors' needs. And that ultimately drives demand for the underlying and actually drives Bitcoin adoption forward. And so some people are hardcore Bitcoiners. They're like, spot Bitcoin, self-custody. I get it. It's what I recommend. It's what I do. But there's also some investors where these products are extremely useful, and it'll get them through the door of getting exposure to Bitcoin, which obviously everybody up on stage believes it's probably one of the best asset classes to be allocated to in the world.
It's one less hurdle, and it's one more door that's open for Bitcoin to get there with
more access.
More access to it, yeah. How do you look of like the traditional hurdles that we still have, Peter? What is kind of like holding Bitcoin back?
Massively education. I think education is one of the most important things for financial people anyway. I think that if you let's take a regular person's job. If you don't work in Bitcoin, when do you have time to learn about Bitcoin? And so there's very few people that after they leave school or university go on to actually really learn anything other than what they already know or what they work in. And if you look at people's lives at the moment, you've got to look at my life, right? I've got to look after my children. I've got to take them to clubs. I've got to take them to school. I've got to look after my house. I've got a family to spend time with. Fortunately for me, I work in Bitcoin, so I've enabled myself to educate myself in Bitcoin. But people that don't work in Bitcoin are the people that we need to educate, because they're the ones you need to come to the table to give mass adoption. And if you find it daunting or you're not interested in learning about financial things in full stop, when are you going to make time to learn about Bitcoin? And the only way I think you can actually get mass adoption would be through ease of access. And ease of access will only come when it's easy for people to get into it, but also they're educated in a fairly simple way to be able to allow themselves to get into it. And so I use the example, recently on a podcast the other day, like I could learn French if I chose to, but I've not got time to do that. So you wouldn't prioritize doing that unless it's really, really important. And if you didn't realize it was really important, then you wouldn't do it. But if you realize something is really important to you, you would make the time and the effort. So I think it's up to professional Bitcoin industry people like us to make educational content very, very absorbable, very, very accessible, and not try and confound people with cryptography. Like no one's going to get cryptography apart from cryptographers. So it's the simple aspects of Bitcoin that help people believe their lives going to be in a better place afterwards that needs to be the educational content, and that needs to be widely made available by I would say like regulators, financial institutions that get into Bitcoin. It really should be taught in schools at some point. I think there's a school in Scotland that just started taking Bitcoin, and they're doing a Bitcoin class on their syllabus, so that's a great first step, but that needs to be taught. And financial education isn't really a thing, especially in the UK where I'm from, because there's not a single adult that doesn't have to deal in some shape or form with financial planning. But there's no why wouldn't you learn about that? Every single adult would have to do some sort of financial planning, but no one teaches you about it. So that needs to change as a cultural thing, and I think financial education needs to be first and foremost, but then Bitcoin needs to be added on top of that to allow for people to, happily get into it and give mass adoption to it.
What's holding real estate people back? And I think Bitcoin and real estate, like you don't have to do the maintenance, like you go through the list and like, it's so obvious.
It's a very good question. I can only talk about myself. I think it's an ego thing, to be very honest with you, because when I learned about Bitcoin and I got into real estate, at the beginning, I dismissed the idea of Bitcoin being I'd say, the monetary singularity, this black hole that is going to absorb the monetary premium of other asset classes over time, due to the fact that because of the lower interest rates, which I didn't understand in detail at the time, real estate tied to the leverage effect and the tax advantages it brings was performing so well that at the beginning of my journey, I kind of dismissed Bitcoin as an interesting network that allows you to maybe buy goods and services online or do donations. That's how I thought about it. I thought about it as a settlement network. I didn't understand that Bitcoin, the currency of the Bitcoin network in itself, is creating this black hole that's going to absorb the monetary premium that sits in real estate. And once I just started to understand how money works and the evolution of money, and I dig deeper into that, and I came to understand that there's always an evolution where humanity agrees on the hardest money to be used because of its value as money itself, to be used in trade and to store value. And once you see that Bitcoin is this near-perfect money, it's pristine collateral for lending, it's a pristine store of value, I think that helps then, or that helped me at least, to fully journey into Bitcoin.
Now, at the last stage, I want to get into how early are we, where are we in this demonetization phase, and what's kind of to come in the future.
Yeah, sure. Well, I think the first area that's very obvious it's demonetizing is the bond market, right? I mean, you know, for generations and really, you know, the last century, the core of the savings of America and a large part of the world was held in the bond market. It was considered to be safe, and it was considered to provide a real yield. I think that's just been blown apart. You know, Bitcoin's up 2,000% in bond terms since 2000. Gold's up 250% in bond terms since 2000. So bonds are dead and are really the first casualty of the sound money wars, as I call them. I think following that, we're going to see a lot of other things be demonetized, including, you know, probably the real estate next, but also stocks and you know, other things, gold, et cetera. But excuse me. But I think the place where you can really see it, I mean, we're in a sovereign debt crisis, and that's, you know, what I wrote about in my book. I mean, you know, as Lynn says, nothing can stop this train. It's out of control, and thank God we have Bitcoin, because it's going to be the new monetary standard when this other thing falls apart, which it's in the process of doing. And the bond market is the tell. Actually, there are two things that tell. There's the bond market as the tell, and there's the fact that gold and Bitcoin both, you know, old sound money and new sound money, are, you know, near record highs and outperforming nearly everything for the past couple of years.
Why is the bond market the tell?
Because what we're seeing is just that people recognize that monetary debasement is assured, and that there's no point in holding on to you know, a piece of paper that will be paid back in, you know, certainly in nominal terms, but in terms of real purchasing power, it just won't have as much purchasing power in the future. So, I mean, you know, real interest rates today are massively negative. The inflation's not correctly stated. And interest rates, although they're higher than they were, they're still relatively low. And so, you know, the bond, if you look at it, I like to use Luke Groman's term, I mean, the bond market is the sucker at the table. They're sitting there, and I mean, who would buy a piece of paper 10, 20, 30, 40 years from a bankrupt government? I mean, the answer is nobody with the right mind, and the market's starting to reflect that.
It's interesting. When we think about
I think we're still very early. I mean, there's an estimated $450 trillion sitting in store value assets. Bitcoin's a $2 trillion asset. That's less than 50 bits. You know, it's very small. The opportunity is huge. There's been decades and decades of misallocation of capital into these other asset classes through the manipulation of the currency and free markets. That's going to flow back to where the capital is treated best, which is Bitcoin. And you know, over time, I think, like I said before, what's interesting right now is we're in this transition period where actually what we're seeing is that Bitcoin's being embedded into these other stores of value to improve their ability to store value. So like the Bit bond is a perfect example. You're combining Bitcoin with the treasury bond to improve its ability to protect against debasement. What we're doing at Battery is combining with real assets, real estate. If you embed that digital scarcity into these other stores of value, you actually improve their ability to protect against the debasement. And so you're taking advantage of Bitcoin by infusing it together. And so we're in this transition period, this bridge period. But over the long time, over a long decades, we're going to see Bitcoin's monetary properties win out, just like the evolution that I talked about. It's just kind of in nature, that's what happens. And I think we can learn a lot from the lessons of nature. Same thing's going to happen here.
Do you think that it also happens with currencies, like the bridging that currencies are backed by Bitcoin at some point?
The currency is backed by Bitcoin? Well, it kind of gets into some of the semantics, but I mean, you could say this strategic reserve in a way. You know, they're kind of already taking these steps. They kind of know where this is heading, and they're like, okay, we're backing our currency in a way. You know, some people have argued that. So I think we're already kind of in the very, very, very early stages of that. But these fiat currencies, I mean, there's really bad fiat currencies out there. And so I think at first you're going to see the dollar eat them, and we're going to be in this dollar-dominant world. But then there's Bitcoin, which is the end game, right? But I think the stable coin is going to lead to a proliferation of dollars everywhere. And then from there, it's the last domino to fall. And then long, long, long period of time, you know, Bitcoin will eventually get there, I think.
Yeah, please.
No.
Okay. Peter, I'm wondering, I found it really interesting to think about, because I actually never thought about like that the bond market might be the first to tell, and what kind of assets are first to kind of get demonetized, what the sequences. How do you see what is Bitcoin kind of tackling first?
Well, I think Larry's right. I think the bond market will get killed because, you know, why would you possibly invest in bonds issued by a government that can't control money anyway? I would never do that. A friend of mine, I was in a cab with him yesterday. He said he works for one of the UK Bitcoin treasury companies, and he said his absolute goal is to kill the UK bond market. And I think he meant it. But I think the bond market will go first, because at least if you look at other assets, property has been around for a long, long time. People use that. You know, people who know property well like it, I think. I think they'll gradually move over to Bitcoin eventually, or fuse it like Sam's company does. Equities are sometimes exciting, because if you invest in, you know, if I owned Nvidia for the last few years, I'd be pretty happy with that. But if you own bonds for the last few years, you'd be like, what the fuck was this? So I think those sorts of things, so cash, bonds, you know, what's the point? And I think if you look at the polarizing differences of, you know, if you could get, 3% on a bond, or conservatively 50 in Bitcoin, it's not a very long conversation with yourself around which one you should do. So I think that probably is the thing that will get killed first.
Interesting. We have a couple of minutes left, and I want to get from everyone, and starting with Leon, kind of the one message that stands out for you when we talk about demonetizing assets in Bitcoin. What's like the most important thing that people should take away from today?
So if you do work in real estate, very simply start using Bitcoin as a unit of account. I think that helps you to realistically analyze the value that you do create, and that really helped me to understand that Bitcoin is a superior store of value, and there's no reason to be threatened or scared. You can gradually tap into Bitcoin. What you guys are doing, for example, for the credit side, I think that's extremely helpful. If you're in real estate, that now you have credit providers that do understand if you merge Bitcoin into a credit structure, it immediately serves as a hedge against everything that we just described.
That's such a good tactic, actually. If you start demonetizing anything else in Bitcoin, it'll eventually show people how superior Bitcoin is. And I think sometimes when you look at Bitcoin's, the increases, some people think they've missed the boat because they don't understand it. Also, it looks almost sometimes too good to be true. And that's what keeps people away. But if you start to denominate, and you always see on Twitter the house 5 years ago, how many Bitcoins it was worth then, what it is now. If you would see your house just going down and down and down and down to Bitcoin, you'd be like, well, why do I own a house?
It's the biggest life hack, period. Yeah. And it works for individuals, it works for corporations.
Everything.
Works for
why would you do
states.
anything other than that?
Shout out to the folks over at TFTC. They just announced a browser extension that works on every single website that denominates fiat into sats.
New homepage.
It's great. And it just helps you to look through that lens of the real money and the real cost of everything. and it helps you basically sense like my life is getting cheaper because I own Bitcoin. If you own fiat, you feel like your life's against you. You're on an escalator, it's moving against you. When you get onto Bitcoin, it feels like things are starting to flow your way. And so it's extremely powerful. I agree completely. It's the number one thing you can do is use Bitcoin as your unit of account and download that browser extension to make it easy for you.
I'm going to get onto my daughter's school about this.
Larry, last word from you. Like, what's the most important message?
Well, I just think it's, none of us have enough Bitcoin.
Get more Bitcoin.
Yeah. I mean, these other assets just are going to underperform for years and years and years. And we sit at just an incredibly, important juncture in financial history. And I still think most of the world is missing it. I mean, everybody here isn't missing it just by the virtue of the fact that you're here. And so I think it's incumbent upon all of us to try and help our friends and drag everybody else into it, because in 10 or 20 years, you're going to know who bought Bitcoin and who didn't. It's going to be so obvious. And so we all need to own more. Awesome. Thank you so much, and please give it up for this amazing panel.
Thank you.
Thank you, Robin. Great job.
Thank you.
Thanks, Robin.
Secure your BTC Prague 2026 ticket at the lowest possible price now.